Okay, I'll start now. People will just have to catch on. So we're given we're told to calculate the carrying value of fixed assets on 28th February 2026. Okay, so let's see. You've been given the fixed asset note with some missing amounts and additional information. So let's first start with land and buildings. So with land and buildings, our missing amount is the depreciation and carrying value. Land doesn't depreciate, so then this would be 0. Well, nothing. It will be nothing, not 0. It would just be nothing, which is, yeah, so same as 0. And then here we have 26,488,000, no accumulated depreciation ever. And then now we need to calculate our carrying value at the end. So our carrying value at the end for the land and buildings will be our carrying value at the beginning plus additions of 0 minus disposals of 398,000. Let's calculate that. That will be 26,488,000 minus 398,000, which will give us 26,090,000, which will also happen to be our cost at the end for land and buildings. This is just for land and buildings. Okay. Then we get to, let me just write it down, 26,488,000 minus 398,000. Okay. Then we get to vehicles. So for vehicles, they've given us our cost at the beginning and our accumulated depreciation and the carrying value at the beginning. For the accumulated depreciation, we need to calculate it ourselves. So, as we know, carrying value is equal to cost minus accumulated depreciation. So now we have the cost, we also have the carrying value. So what we need to do is to rewrite our formula basically, to switch, because this is our unknown now. So we need to have an equation that says accumulated depreciation equals to this and this. So what we'll do is we'll move accumulated depreciation to this side, so it will now be a positive, then carrying value to the other side, and it will be now a negative. So another way to calculate accumulated depreciation is that it's equal to cost minus carrying value, if you have those amounts. So for our accumulated depreciation at the beginning, for vehicles, we will have 1,050,000 minus 628,750. 1,050,000 minus 628,750 will give you 421,250. Okay. So where are we? Yes. So we're done with the balances at the beginning. So we need to calculate depreciation, our carrying value at the end, and our accumulated depreciation. Excuse me. So let's see, what does the information say? We are told that the depreciation rules, we have vehicles at 15% per annum on cost, and we also have equipment at 20% per annum on diminishing balance. And then we told the vehicles sold on the 30th of November 2025 for 295,625. And the accumulated depreciation at the beginning of the year for the vehicle sold was 128,750. Okay, so we're looking for depreciation. We know, looking at vehicles, that there was a vehicle that was sold. There were no additions, so that means from the balance we had at the beginning of 1,050,000, some of those vehicles were sold. Now we need to calculate depreciation for the sold vehicles separately and for the remaining vehicles separately. Now, we're told we started off with $1,050,000 and then the cost at the end is $600,000. That's the cost of the vehicles that we're left with. So to calculate the depreciation of the remaining vehicles, we will say 600,000 multiplied by 15% multiplied by 12 over 12 because we had them for the full year. So 600,000 multiplied by 15% multiplied by 12 over 12. That'll give us 90,000. Okay. Then we look at the sold vehicle. So first we need to calculate the cost. They didn't give us the cost of the sold vehicle. But we have the cost at the beginning of all vehicles and we have the cost at the end for all vehicles. And we didn't have any additions. So what we can do is just take our balance at the beginning of $1,050,000 minus 600,000. And that will give you 450, I think. Let me just check. Yes, 450,000, and that will be the cost of the vehicle sold. So now we have the cost. Okay, so now that we have the cost, we need to calculate the depreciation. So it will be 450,000 multiplied by 15%. But let's go back to the information. What did it say? This vehicle was sold on the 30th of November 2025. We were told from our information at the beginning that our year ends on the 28th of February 2026. So we did not have these vehicles for the full year. So we need to draw a timeline. So 1st of March 2025, that's when our year starts. 28th of February 2026 is when it ends. And then 30 November 2025 is when our asset was sold. So we need to calculate from March up until the 30th of November. How many months are those? How many months are those? Because that's how long our asset depreciated before it was sold. It does not depreciate after we no longer have it. It does not depreciate with us anyway. So we have March, April, May, June, July, August, September, October, November. That is 9 months. Let's write that down, 9 months. So now for our calculation, we'll need to multiply by 9 over 12. We need to apportion. So that'll be 450,000 multiplied by 15% multiplied by 9 over 12. Right, and that will give you 50,625. Okay, so now we have depreciation for both remaining and sold. We add those two together to get depreciation for vehicles in total. So 90,000 plus 50,625. And that will give us depreciation of 140,625. 140,625. Okay. So now we can calculate our carrying value at the end for vehicles. So when you have movements and such, your carrying value at the end is equal to your carrying value at the beginning plus your additions minus your disposals at carrying value minus your depreciation. So that's what you need. That's the formula, basically, for carrying value at the end when using the note if you have all this other information. So we have our carrying value at the beginning. It is 628,750. So we'll say 628,000 750. We had no additions. Then disposals were 270, so we say minus 270, 625. And then we had depreciation, so we subtract 140,625. And that will give us our current value at the end for vehicles of 217,500. Okay. Okay. Let's continue. Then we need to calculate the accumulated depreciation at the end. That's what's missing. So if you have your carrying value at the end, so another formula, your carrying value at the end or whenever is equal to your cost at the end minus accumulated depreciation at the end. If it was the beginning, you would use the beginning amount. So now we have the carrying value at the end. We also have the cost at the end. So we are missing the accumulated depreciation at the end. So then accumulated depreciation at the end will be equal to our carrying value minus cost minus carrying value. Cost minus carrying value. The end amount, of course. Okay, so let's see from our information, what are those? Our cost at the end is 600,000 and our carrying value at the end is 217,500. So we'll say 600,000 minus 217,500, which will give you 382,500. Okay. So just as an update, it's better if you're streaming this from YouTube. The quality is better there. Okay, where was I? Now we look at equipment. So equipment, we start with our carrying value at the beginning. Cost minus accumulated depreciation. So that would be 596,000 minus 304,000, which will give us 292,000. Then they've already done the movements for us. We just need to calculate our carrying value at the end. So remember, formula for carrying value at the end equals to carrying value at the beginning plus additions minus disposals minus depreciation. So that's what we'll do. 292,000, which is our carrying value at the beginning, plus our additions of 140,000 minus 0 for disposals minus 104 for depreciation, which will then give us 302,000. And then for the accumulated depreciation at the end, and this is if and only if you do not have, you do not have a disposal. To calculate your accumulated depreciation at the end is going to be your accumulated depreciation at the beginning plus your depreciation. And this is only if there are no disposals. That's what you do. So that'll be 304,000 minus 104, which will give us 408,000. Or another way you could have done this is saying cost minus carrying value at the end. So that would be 710,000 minus 302, which also gives you 408,000. So it just depends which one you want to use. Okay, and that's all for this short question. I'm just gonna give it 5 more minutes. Then if anyone has a question, this is the time to ask. If you do not have a question, right, that's also fine. And this will be posted up on YouTube, the recording, for anyone who's interested. Good, no questions. Thank you for joining or watching.